Do you ever hear about people saying they want to invest in the stock market, but you're like, how do you just invest in the stock market? Well, you actually can do that, and that's what we're going to talk about in today's video. Hey, I'm Sean from Gym Class Finance. Today we're going to be talking about index funds. Maybe you're not sure what an index fund is. An index fund is a kind of like a stock or a mutual fund that's going to track an index of the stock market. So you might have heard of the S&P 500, you may have heard of the Dow or the NASDAQ. So essentially an index fund tracks those, and so whatever the NASDAQ does, that's what your index fund is going to do. So in a way, investing in index funds is super passive, meaning you really don't have to do a whole lot of work in regards to investing. You don't need to understand it, you just need to know that you're going to invest in the entire stock market, or maybe the S&P 500, or as we said, the NASDAQ or the Dow Jones. So before you start investing in index funds, you need to do three things. You need to pick the index that you want to track, you need to choose the fund that tracks your selected index, and you need to buy the shares of that index fund. We're going to look at each of those three things, and then at the end of this talk about what are some possible solutions or some possible funds that you might be interested if you want to get invested in index funds. First, you want to pick an index. Let's just start with maybe the S&P 500. So you're looking at the top 500 companies in the United States that you would be investing in. Now, that's just one example. I typically like to invest in the entire stock market. So that means you're going to be investing in those S&P 500 companies, the large US stock. You're going to be investing in the small US stocks, you're going to be investing in international stocks, as well as bonds. Next, you're going to want to choose the right fund for the index that you're going to track. Now, this is very simplified, and it is dependent on the brokerage that you're using. So if you're using something like Robinhood, you're not investing for retirement in a tax-advantaged fund or account. You have some limited options. But if you're, let's say, my two favorite brokerages for retirement are Vanguard and Fidelity, then you're going to have plenty of options, but also you're going to be able to narrow down specifically the type of fund that is right for you. The third part to all this is to buy index fund shares. So each of those funds that we've just talked about all have the index fund. It's kind of like a stock price, and whatever it's valued at, that's the price that you can pay for the one share of the index fund, or maybe it's an ETF, depending on what you're using as your brokerage. So why invest in index funds? Well, first of all, investing in index funds is one of the easiest and most effective ways for investors to build wealth, and at the same time, you don't need to be a stock market expert in order to do so. When you're investing in index funds, you're minimizing your time spent searching for that special or perfect stock. You're investing with less risk because you have a variety of stocks that make up that fund. Also with index funds, you get a wide variety of investments. It's a lot less expensive. Index funds are typically much cheaper than regular mutual funds. And so that's another perk. You pay less in taxes, and you can automatically invest in these funds if you'd like. So the ease of doing it is pretty unbelievable. So some reasons why someone might not invest in an index fund might be that you're never going to beat the market, because obviously you are tracking whatever the market does, or the index that you choose, it's going to do exactly how that market or index actually does. You don't have any loss protection, so index funds track their markets in good times and bad. So when the market's great, you're going to be doing great. When the market's down, you're going to be going down. So you're really not going to outperform what the index does. I'm going to share 4 funds that are going to either give you the entire stock market, or they're going to track the S&P 500. First, with Vanguard, you can choose to invest in the S&P 500 through an ETF. So you could do this on Robinhood, Webull. You don't need a retirement account. You could do this in your index it's an index fund, so you could do this with your brokerage like Fidelity or Vanguard. You'd probably want to choose it with Vanguard, because that's what I'm going to talk about first. But ticker symbol VOO, which is the Vanguard 500 index. It tracks the S&P 500. and it costs as little as $4 annually for a $10,000 investment. So you can see how cheap it is to actually own this fund. Another one that is going to track the entire stock market. Now this one is one you couldn't buy on Robinhood, but you could buy on the Vanguard platform. You could buy it on a Fidelity platform as well. But that's ticker symbol VTSAX, which is the total Vanguard total stock market. Now, if you're on Robinhood, you can buy its ticker symbol VTI. It's literally the same thing. It's just sold as an ETF rather than an index fund. So there are 3 that you can easily choose from. Like I said, there's tons of funds out there, but these are low-cost funds that you can look into. And 2 others, as we're looking at Fidelity. Now, you would definitely, with these funds, you would prefer to have a Fidelity brokerage account. I do. I have a Roth IRA set up with them, with Fidelity, and so if you wanted to invest in the S&P 500, now they don't call it the S&P 500 for this fund because it's a 0 expense ratio fund, meaning you pay absolutely nothing per 10,000 or however much you have in it annually. You're not going to pay any expense ratio, but that's ticker symbol FNILX, Fidelity Zero Large Cap Index Fund, and they just don't call it the S&P 500 because they'd have to pay a fee in order to call it the S&P 500, but it's tracking the same thing. The other one that is completely expense-free, no sales loads, completely free, is the Fidelity Zero Total Market Index Fund. FZROX is the ticker symbol. I'm once again going to go into these a little more another day. This is just a brief overview as we talk about index funds and why I love them, because they are passive and they're very easy to buy. I hope you found value to this video. If you did, please make sure you smash that like button. And if you're new to the channel, go ahead and subscribe. That definitely helps me out. Share this video or do whatever you can to support the channel. And remember, it's that simple.